Amazon, Netflix, and most recently Zoom are all companies, three companies that have just had a sensational run in the market. What do they all have in common? Well, at one point, they were just a small idea, a young company, and someone or a whole bunch of somebodies had to believe in them to just see and have the vision that they would be at the status that they are right now, monsters of the market. These three companies are prime examples of growth investments. People who invested in these companies in the beginning stages are what you call growth investors. Growth investors see young companies and see the potential for them to just expand, take off, and just take over the world. Just imagine 3 years ago when Skype was around, nobody would ever consider Zoom blowing them out the water like they have. But it's happened. Whoever believed in Zoom early on in these stages, they're pretty wealthy right now. Growth investors are the type of people that are out to find something new, innovative, something that they can see having a high ceiling and high growth. As opposed to value investing, growth investors don't really care about things that are overvalued. They just see the potential growth and continuing to roll and continue to roll. Amazon, I believe in 1997, at one point their stock was $50 a share. Today, their stock is nearly $3,000 a share. Just imagine that growth. When Netflix first started out, we had a store or a company that was dominating the movie game. They were called Blockbuster Video. You can't find one now, but Netflix is everywhere because somebody was able to see that streaming was going to change the game. Same thing with Zoom. You just saw the example I gave you earlier about Skype and Zoom and how Zoom has just taken off and, so to speak, Zoom passed Skype and have pretty much eliminated them as a competitor. Now, when you're a growth investor, you're in the high reward, but with high reward comes what? High risk. With growth investing, you're not really concerned about the fundamentals of the company, but you are concerned about the earnings. What have they earned in the past, and what are these earnings looking like in the future? I need the return on the equity. I need a above average, a high return. With value investing, I probably get 20, 25 on a phenomenal year. With growth investing, I'm looking for 400%, 800%, 1600%, even just 100% would be growth. So remember, with value investing, you're getting consistent long-term gains. With growth investing, you're getting exponential growth. You're that person that invested in Google when they first started out, invested in Amazon, whatever small startup company it is that you believe in that nobody knew about and now it took off. Growth investing. Is this a personality trait in your investing? Are you a growth investor? If you're concerned about these companies, if you're not concerned about the security and dividends and maintaining money, and you're concerned about actually fast, high growth, then you're a growth investor. Now, if you like this video, you know I need you to hit this like button. I need you to subscribe, because look, we got a movement going on. We're in the midst of our series, What's Your Type? And who knows, we might have already described who you are, or I might be getting to it. But I need you to subscribe, to keep up with that. And also, with the subscription, turn on those post notifications. When I drop this, you can tune in instantly and see if I'm talking about your investing style, your investing behavior. So until next time, strong mind, legal money. Peace.